The Tax Foundation estimates that the average tariff rate in the US could rise to nearly 17.7% under Donald Trump. He's promised a 10% tax on imports across the board, 25% on Mexico and Canada, and 60% on imports from China. This is what that would look like relative to all of the tariff data going back to the 1930s. After 70 years of seeing the average tariff rate in the US trending lower as globalization and free trade became the norm, we would almost instantly see it get back to the highest level since the Great Depression. In fact, many suspect that the high tariffs from the 1930s were instrumental to triggering the worst downturn in modern financial history. Whether you are a fan of tariffs or not, they are going to happen, and the impact they're going to have on the economy and markets could be massive. The first goal of tariff is to strengthen domestic manufacturing by making foreign goods more expensive and so US goods more competitive. This is a chart showing US manufacturing employment, and we see that US manufacturing has been on a massive decline over the last 40 years, falling from its peak in 1980, just as we saw imports begin a meteoric rise. Many attribute the exporting of US manufacturing overseas as the root cause for rising inequalities in the United States, explaining why middle-class wages have only risen by 73% since 1980, while the upper income wages have grown by 326%. A radical increase in tariffs does have a shot at actually reversing these trends. But just like the drawbacks of globalism were not felt until much later, it's unlikely that any positive impacts from tariffs will be felt anytime soon. The second goal of tariffs is to bring in revenue for the US government, and they really need that revenue right now. The US government has been bleeding about $1.5 trillion per quarter over the last few years, a level of deficit that is completely unprecedented. So tariffs would indeed provide a much-needed revenue to begin potentially reducing the deficit. Over $200 billion were collected from tariffs during the Trump and Biden administrations. Tariffs under Trump 2.0 are magnitudes larger. Estimates currently suggest they could bring in as much as $3.7 trillion over the next decade, which equates to about 10% of the total current national debt. So tariffs could indeed bring in some relief to the government's budget, but again, government debt is a long-term theme that is unlikely to have much impact on markets or the economy in the short term.